I am going to that. What is an investment? There is a small difference between saving as well as investment. Normally saving in the sense, it is a process of keeping set aside some amount, that is known as the saving. And coming to the investment, it is process of using and process of purchasing some asset for the purpose of earning some return in the future. That is it is a partial saving out of total income and to meet future need by earning more returns. Why we need to invest? We need to invest for earning some return. In order to earn some money, we need to invest and we need to pursue some goals, and in order to achieve some goals and objectives in our society, I mean in our personal life, we need to invest somewhere and some place. So when to start? We need to start invest early and regularly, and we should also invest amount for long term purpose, not for short term purpose, because we need to give some time to earn. See, whatever money we are spending and we are investing, we need to give some time to grow it up. In the sense, if you are showing the seeds today and you want crop tomorrow, in the sense it's very difficult to get the crop. Once you are showing the seed, you have to wait for some time. Then obviously it will be giving some returns in future. Then having said this, let me also try to tell you what are the investment options. There are so many investment options. As I told you, investment is in the sense purchasing or buying of an asset for the purpose of earning some returns in the future. In the sense, see, we need to have so many assets, physical assets, financial assets. I am talking about only few assets. Coming to physical assets, if you wanted to invest in real estate, okay, if you can purchase the flat, afterwards you can sell it off, you can get some return, and you can also invest in the gold. See, nowadays gold is a precious metal, and this is very dominant in Indian society and Indian traditional as concerned. The thing is, you can also invest in the gold, you can also invest in the jewelry. Here I am talking about gold in the sense gold coins and commodities. Even you can invest in the iron, steel, any commodity you can invest either in physical form or you can in electronic form. In the sense, coming to the financial assets, in the financial assets we have a different types, means short term financial assets, that is less than 1 year, and long term is more than 1 year. The thing is, see, normally in the short term financial assets there will be saving accounts. Either you can invest in the bank or you can invest in the post offices. Right? Nowadays we are getting 4% to 6% interest. Some Kotak Mahindra Bank is offering 6% interest. Some other banks are offering even interest rate for saving bank is 4%. And you can also invest in the money market funds, that is commercial paper, certificate of deposits. I am not going to technical stuff in this, because just I am providing the basic information which is required for everyone. And coming to the fixed deposits, even fixed deposits for short term means less than 1 year. Even you can invest for 200 days, even if you can invest for 150 days. Even fixed deposits also providing some interest, even if it is a more than 1 year, and per annum, that will be considered as a more than 1 year, that is a long term. Normal rate of interest for the above is 4% to 7%. And coming to the long term financial assets, it's a more than 1 year. You can take the post office savings scheme, even you can recurring deposit or MIS, monthly income savings scheme. In that, it's a, now it has been changed to the 5 years, earlier it was in 6 years. It is a providing 8.5% per annum interest, and there is no bonus at the end. In the previous, before that, in earlier stages, there was a bonus, and there was a maturity for 6 years. In the sense, and coming to the PPF, this is also public provident fund, and it is providing 8.8 interest per annum. It is a tax exemption is available in this. So normally this, even PPF also you can invest, but there is no withdrawal up to 6 financial years. Coming to stocks, which is a predominantly used as well as Sensex and Nifty, BSE, Sensex and Nifty, these are the technical terms. Normally everyone should know that. Normally it is a Sensex, BSE Sensex, we need to invest in the 30 stocks, and Nifty we need to invest in the 50 stocks. These are the barometer of the economy, and the sense even you can also invest in that. And fixed deposit there, but as far as the main drawback is concerned, in the terms of stocks, there is a very high risk, but you may get return or you may not get return, and you may also get return as negative. In the sense, it is extremely volatile for the economy is concerned. And coming to this fixed deposits, normally it is an interest between 6% to 9% if it is a more than 1 year, and some banks are also providing 10% like that. And bonds and debentures, these are the fixed income debt. Means if you are investing in the bonds, according to the infrastructure bonds is coming into the existence, if it is ATC, if it is a more than ATC, if you wanted to utilize the tax tax planning and tax avoiding, then you can also invest 20,000 rupees in infrastructure bonds. It is a fixed rate of interest, it never changes even if inflation comes, right? And coming to the mutual fund I am going to discuss in detail. What is the mutual fund? See, this is the mutual fund, is a pool of some amount of funds from various people. See, if you have 1 lakh, means I am going to take it over total amount, I am going to invest in the securities. Once I am getting the return, what will happen? I am going to distribute to the unit holders. It is not the shareholders. Whatever return I am going to get it, I am going to distribute to the unit holders. And what is the flow? First, investors, we need to pool their money, and the fund manager is, what is the main role of fund manager? Is a professionally managed, means professionally managed one. Means if you wanted to advise, if you wanted to get some advice from investment, you have to approach investment advisor. If you wanted to get some financial matters, you have to approach financial advisor. Similarly, fund manager is taking the total amount from the various people and invest in securities. Once they get return, they are again distributing to the investors. This is the invest in securities, generates returns and pass it back to the investors. This is the thing, investor and fund manager securities. Once is investing in the securities, returns will also pass it to the investors. And this is a one old axiom is there. It is not wise to put all eggs in one basket. What will happen if anything happens? The all eggs will be broken out. In the sense, it is very difficult to save. It is very difficult to protect. So that is why mutual funds has been introduced. This is the first thinking has been done. Necessity is the mother of invention. Similarly, see, people think that it's not wise to put all eggs in the one basket, then the mutual fund has been introduced. See, in the sense, what are the advantages? Why mutual funds has a better investment when compared to other investment? First thing is professionally managed. Some people think that, okay, if I have 100 rupees, I wanted to even professionally management in the sense, if you are an individual, you don't have a time to invest, you don't have a time to, always check the markets. What is the Nifty market? What is the Sensex? What is the Nasdaq? What is the other stock exchanges? You don't have a time to invest. You don't have a time to check all those things. But some people who are specially mentioned for that, those are fund managers. They are always thinking about the how to increase, how to appreciate your capital, how to appreciate your money. In the sense, they are professionally management. So that is why mutual funds manager, the fund manager will always check it out the things, how professionally we are managing. Why it is so much competition in the mutual funds in the sense, if it is HDFC mutual fund, HSBC, ICICI Prudential, see there are so many mutual funds are available. See, their fund manager will technically thinking and they are always thinking about how to improve your money. That is the main motto of mutual funds. If you are an individual, you may do something wrong because you are not the perfectly managed all those things. You may have several other responsibilities also. So that is why we need to approach professional manager. In the sense, even fund manager is not doing charity here, and he is also working for money, and he charges some amount that is known as the load. And diversification, that is what I told you just now, and convenient administration, return potential and low cost. The costs are very less. Liquidity, how far we can convert into the cash is known as liquidity. Transparency, flexibility, and why people think that fixed income is fixed deposits are getting 8% to 10% interest, but it is not, because while we are considering tax and inflation, before you are investing anywhere, first you need to think about what is the inflation rate today. Today is 7%. If you are investing fixed deposit in SBI, it is a 9% or 10%, means in the sense the real return is after deducting the tax, in the sense if it is a tax paid is 2 rupees and 7 rupees, only 1% return you are going to get it. But fixed deposits, oh, I am getting 9% interest, it is not actual return you are getting, because of tax and inflation effects are there. And see, there is a one recurring deposit system is there in normally in the mutual fund. There is a system is a systematic investment plan. If you build wealth through systematic investment plan, automatically you will get, it is also just like recurring deposit. You have to regularly save the amount and you will get some units. Obviously it will be increased according to net asset value, and it is a impulsive buys and sells will be controlled, means it is a reckless buying and selling will be controlled, and it also connects the power of compounding. If you see, that is the thing, you can invest in 500 rupees and multiples of any 1 rupee you can invest in very well. This is the thing. Thank you. Any questions?
Yeah, I have a question.
Right.
From mutual funds, is it taxable?
Yes, it is a debatable question in the sense returns from, normally there are the different types of mutual funds. The ELSS is there, equity linked savings scheme of mutual funds are not taxable. Any other funds, even if you earn from debt funds, even if you earn from income funds or any other funds, it will be taxable. But the only one mutual fund, that is a different types of mutual fund, in that ELSS is there, equity linked savings scheme, that is not at all taxable. Even the other things are, that will be taxable on the basis of indexation. It is when you are purchasing, when you are selling, on the basis of indexation, it will be that taxable. It will be normally compared to other tax brackets, 10%, 20%, 30%, it will be very less. So mutual funds are always advisable, and this will be happy investing in the mutual funds. That is a good one. And any other?
Everybody is so happy investing in mutual funds.
Right.
Why is it better?
Right. That is also one more question. The thing is, it is normally what will happen, that depends on the, see, some, if you wanted, if it is a ICICI Bank, if it's a HDFC Bank, fund managers are different. ICICI Bank continuously getting the more return, HDFC is continuously getting the less return. This is the totally depend on the fund manager, how caliber, how efficient, how can he think.
Everybody is happy. We have given so many virtues
Right.
and advantages of mutual
Right.
funds. Then why is it that they are just 2 or 3 lakh crores in India? Fixed deposits are about 50 lakh crores. When you compare the two, such a big difference even after tax benefits and so on and so forth.
Fine. See, normally what happens is there is a too much. I mean, the Sensex has been crashed out. Ultimately, everyone is getting the less returns. Once the Sensex has been going more than the 20,000, everyone thinks that I wanted to invest in the stocks. Once the Sensex has been coming down to 16,000, everyone burnt their hands. Oh, fixed deposit is a better investment than the stocks. Earlier, there was think that okay, so if you invest in stocks, you are getting 100% rate of interest, and because this is a totally barometer of the, I mean, the total economic conditions it reflects. And I am not telling that, I am not convincing that mutual fund is a better investment than other investment, but when compared to these things, and subject to the keeping in view of similar other things into consideration, then mutual funds compared to other things, because these are the professional managers and managed by all the things, and diversification is also there, one more advantage of that. So this could be better.
They will feel that investment in the mutual funds are better.
Right. In the sense, normally what will happen, see, most of the people, they may not approach for the mutual funds because that there is no secured returns. So normally if the people are crashing above 60 or 40 to 50, 50 to 60, they are not approaching the fixed, I mean, mutual fund, they can approach the fixed deposits because they are going to get the returns, secured return and fixed rate of return. But that is also what I told, keeping the view of the tax and inflation effect. So normally people like us, 30 to 40, 40 to 50, we can take the risk in future. So see, we can also get some time to grow the money in future for our returns, for our goal, satisfying our goals. So that 30 to 40, 40 to 50, people can invest in the mutual fund, and 50 to 60 and 60 to 70, they can go for the pension funds, and they can go for the any other mutual funds. Because you can't do all those things in the you can't do all the research in that. If it is a professional manager, he always looking into that when it is going to improve, when it is going to stuck down. They also have some techniques like hedging. They can do the hedging and they can cover the losses. So that is why I'm not telling that mutual funds is ultimately better investment. I'm not showing the statistical information regarding this. But when compared to the professional manager and individual, the professional manager ultimately better. If you wanted to take the dietetics, if you want, which one I wanted to take the food, then you can go for the dietetics rather than the normal things. Anyway.